Hey everyone, welcome back to the channel. The AI race just hit a whole new level. Nvidia has officially announced one of the largest tech investments in history, up to $100 billion into OpenAI. That's not just a headline number, it's a deal packed with staggering details, billions in hardware, massive data centers, and enough GPUs to power what OpenAI is calling the foundation of the future economy. Let's break this down, because the implications stretch across chips, AI, Wall Street, and even global policy. Earlier this week, Nvidia confirmed it would pour billions into OpenAI, and while the announcement was big on numbers, it was deliberately vague on specifics. What we do know is that most of the cash will be directed straight back into Nvidia's own cutting-edge graphics processors. OpenAI isn't buying them up front either, they're leasing Nvidia's GPUs, allowing the company to spread those enormous costs over the useful life of the chips, which industry sources say could be up to 5 years. This shifts some of the financial risk back onto Nvidia, but it locks OpenAI into using the most powerful chips on the market for years to come. Now here's the scale we're talking about. Nvidia CEO Jensen Huang described the partnership as monumental in size. He's estimated that building an AI data center with a gigawatt of capacity runs about $50 billion. And out of that, $35 billion alone is just for Nvidia GPUs. The first $10 billion from Nvidia's investment will be released soon, specifically to help OpenAI deploy its very first gigawatt facility in Abilene, Texas. That's set to come online in the second half of 2026. If you're enjoying how deep we're going into this deal, don't forget to hit that like button and subscribe. It really helps support the channel, and it keeps you updated on all the major shifts in AI and tech. So what does OpenAI actually get here? For one, Nvidia's equity stake gives OpenAI some flexibility. It helps with hiring, operations, and marketing. But the single largest use of funds is compute, and compute here is basically synonymous with Nvidia GPUs, which are absolutely critical for training large language models and running complex AI workloads. OpenAI executives have been blunt about this. Financing data centers is brutally expensive, and equity is the most costly form of funding. So on top of this Nvidia deal, the company is preparing to take on debt to cover the rest of its massive expansion plans. But by leasing the chips and having Nvidia's long-term commitment, OpenAI can negotiate better debt terms with banks. It's essentially using Nvidia's balance sheet strength as leverage. At the announcement, Nvidia and OpenAI revealed a letter of intent that sets the target at 10 gigawatts of Nvidia systems. To put that into perspective, 10 gigawatts is an enormous amount of compute, equivalent to the power used by millions of homes, dedicated entirely to AI infrastructure. Nvidia and OpenAI will also co-optimize their roadmaps, aligning Nvidia's hardware and software development with OpenAI's model and infrastructure needs. This isn't just a supplier-client relationship anymore. It's a strategic alliance. Sam Altman himself called it the foundation for the economy of the future. His words were clear: compute infrastructure will be the basis for the economy of the future, and we will utilize what we're building with Nvidia to both create new AI breakthroughs and empower people and businesses with them at scale. And let's pause here. If you're following the AI hardware race closely, drop a comment below. Do you think Nvidia's $100 billion bet pays off, or does it create new risks for the entire AI sector? The strategic ripple effects are massive. Nvidia is already the undisputed leader in AI hardware, and this deal reinforces that dominance. It puts enormous pressure on AMD, Intel, and smaller chip startups to innovate fast or risk losing relevance. Some analysts believe this could also spark interest in alternative architectures. Think neuromorphic chips, or even quantum processors, as competitors look for ways to differentiate against Nvidia's stranglehold on the GPU market. The $100 billion investment also raises questions about competition and antitrust. Andre Barlow, an antitrust lawyer, has suggested the deal could very well catch the attention of the Department of Justice, since it blurs the line between a supplier and an equity partner. Nvidia isn't just selling chips anymore, it's embedding itself into the AI economy as a stakeholder. But analysts on Wall Street are already reacting. Evercore ISI boosted its Nvidia sales estimates by $5.5 billion for the second half of 2026 and raised its price target to $225. Bank of America went further, projecting that Nvidia could see a 3 to 5 times return on this OpenAI deal alone. On the flip side, Stacy Rasgon at Bernstein voiced what he called circular concerns. Nvidia invests in startups. Those startups spend the money to buy Nvidia GPUs, and the revenue cycle boosts everyone's earnings without necessarily creating new value. Investors worry this could artificially inflate numbers without building long-term sustainability. Midway through this, let me remind you again, if you want more breakdowns of huge AI and tech deals like this, make sure you subscribe and turn on notifications. We're covering everything from OpenAI's hardware projects with Jony Ive to Meta's billion-dollar poaching campaigns. So, you won't want to miss it. Back to the deal. The first phase will use Nvidia's Vera Rubin platform, rolling out in late 2026. But this isn't happening in isolation. Oracle is leasing the Abilene facility under the Stargate project, and OpenAI will eventually be responsible for those operations. CFO Sarah Fryer explained it this way: folks like Oracle are putting their balance sheets to work to create these incredible data centers you see behind us. In Nvidia's case, they're putting together some equity to get it jump-started, but importantly, they will get paid for all those chips as those chips get deployed. It's a recurring theme. Everyone in this ecosystem is both funding and profiting off each other. That's why some analysts call this circular. Nvidia's market cap has already soared past $4.3 trillion, largely thanks to GPU sales to OpenAI, Google, Meta, Microsoft, and Amazon. Meanwhile, OpenAI's private valuation has hit $500 billion, thanks in part to heavy investments from Microsoft. The concern is that money is being raised, reinvested in Nvidia chips, and booked as growth across multiple companies, even though it's the same cash flowing in circles. Jamie Zakalik at Neuberger Berman called it out directly. The circular nature of this deal is goosing up everyone's earnings and everyone's numbers, but it's not actually creating anything. Still, Nvidia and OpenAI argue that as long as demand for AI services keeps rising, the revenue will be real, and the circularity won't matter. Sam Altman himself addressed those fears to CNBC. He said the focus has to remain on selling real services to consumers and businesses. We need to keep selling services to consumers and businesses and building these great new products that people pay us a lot of money for. As long as that keeps happening, that pays for a lot of these data centers and a lot of chips. Now let's step back. What does this mean for AI as a field? With up to 10 gigawatts of Nvidia compute dedicated to OpenAI, we're looking at the largest AI infrastructure project ever attempted. This is compute power on a scale that could accelerate breakthroughs in natural language processing, robotics, computer vision, and even areas that today seem impractical or too costly. At the same time, it concentrates AI infrastructure into the hands of just a few dominant players, raising questions about accessibility and equity. Smaller startups, academics, and open-source projects could find themselves locked out of meaningful access to high-end compute. And this isn't just about the US. Nvidia and OpenAI are building infrastructure with global implications, as China ramps up its own AI efforts and governments around the world push for both innovation and regulation. Sustainability also looms as a major challenge. Data centers at this scale require enormous power and cooling. Analysts warn that developing greener technologies will be essential if AI infrastructure is to remain viable. If you're still with me, thanks for watching this deep dive. Be sure to like this video if you're finding it useful, and don't forget to subscribe so you don't miss updates on Nvidia, OpenAI, and the next trillion-dollar moves in AI. The bottom line is this: Nvidia's $100 billion investment into OpenAI isn't just another business deal. It's a declaration that compute power is now the most valuable commodity in the AI economy. It could pay off with massive returns and groundbreaking AI advancements, or it could fuel concerns of an unsustainable bubble. Either way, this partnership is about to shape the next era of artificial intelligence. Thanks for tuning in, and I'll catch you in the next one.